Hello. We continue to think that using the Japanese experience as the standard roadmap for Asian economies after bubble burst isn't particularly useful. We argued a few weeks ago that demographics haven't actually been a determining factor in Japan, and here we want to make the case that the consequences of the bursting of the bubble weren't inevitable either. We can do this because while it often isn't remembered, Taiwan had a bubble in the 1980s that was as big as Japan's. But Taiwan thereafter didn't suffer economic stagnation. This should be relevant for today, given all the concerns there are now about China being on the road towards Japanese-style stagnation. China clearly now has a lot of problems, but the rate of change in the industrial sector, which is what we want to focus on today, at least looks much more like Taiwan in the 1990s than Japan. So first of all, for those who don't know, just an introduction to the Great Taiwan Bubble. Taiwan's stock market rose 15 times between January 1985 and January 1990, a rise that makes the 200% increase in the Nikkei look positively pedestrian. At the height of the frenzy in 1989, Cathay Life was trading at 87 times book, and Taiwan's ICBC had a market capitalization bigger than the 6 of the biggest US banks combined. As in Japan, the background to this surge was currency appreciation. Taiwan's currency appreciated from above 40 to the dollar in late 1985 to under 25 in the early 1990s. Now, inevitably, given this huge increase in prices, just as it did in Japan, Taiwan's bubble then burst. But economic development didn't stop. Japan's economy didn't grow at all in nominal terms between 1995 and 2013, and relative to US levels, GDP per capita has been falling since the early 1990s. By contrast, nominal GDP in Taiwan is now 5 times bigger than it was in 1989, and on a PPP basis, per capita GDP is now higher than it is in Japan. One driver of this differentiated experience has been corporate developments, in particular those in electronics. In Japan, companies like Panasonic, Hitachi, Toshiba and Sony were all among the biggest listed firms in the 1980s, and they still make that list today. In Taiwan, 6 of the top 10 listed firms are in electronics. The biggie, of course, is TSMC, which accounts for around 30% of total market capitalization. Now, there's a few reasons to focus specifically on electronics, but one is the very visible role it has played in Japan's deflation. In contrast to what you normally expect in deflation, the fall in Japanese prices has been more visible in goods rather than in services. Prices for services actually rose slightly between 1993 and the next 20 years, while goods prices fell. In that same period, durable goods prices fell at an average annual rate of 4%. In Taiwan, they fell by 1%, and in the US by just 0.4%. A big driver of Japan's excess goods deflation was electronics, which hit the wall just as real estate was doing the same. In the 1980s, Japan's semi-industry was still on the up, with its global market share rising from under 30% at the start of the decade to 50% 10 years later. But by the time Japan's stock market crashed, Japan's dominance was already fading. Revenues of the big electronics firms continued to grow into the 1990s, but then they flatlined or even declined. Now, that some companies run into trouble is clearly a usual part of economic development. The problem for Japan was the problems were broad-based, with real estate, electronics and finance all getting into trouble. And as these industries fell into crisis and decline, there wasn't much replacement with new ones. Of the 30 biggest listed firms in Japan in 1990, 13 were still in the top 20 years later. Now when we look at Taiwan, trends couldn't be more different. TSMC wasn't established until 1987, and the firm didn't break into the top 30 listed firms until 1994. In 1993, there were no electronic firms in the top 15 listed firms in Taiwan, and the first one that could really be classified as being in tech was the computer manufacturer Acer at number 19. But just 6 years later, 7 of the top biggest listed firms were tech, and fully 23 of the top 30 were manufacturing some sort of electronics. The dominance of tech continues today. One reason is that within tech, there's a lot of creative destruction. At the end of the 1990s, TSMC had already become Taiwan's largest listed firm, and its smaller rival USMC was already number 2. But the rest of the top 5 tech firms, ASUS, Acer and Quanta, were all specialist computer makers. Into the mid-2000s, there was the rise of the optoelectronic industry. That and the DRAM industry have since faded, but that's been offset by the rise of the components makers like Honhai and Delta. It seems to us then that one of the reasons Taiwan has continued to prosper after the 1980s was this corporate vibrancy. And this has a few implications, both for thinking about Japan and China. For Japan itself, it gives another reason, I think, to be optimistic that structural decline is now over. While the bigger tech firms are now starting to grow again, they've now been joined by new companies like Keyence and Tokyo Electron. Japan's auto industry obviously needs to show that it can survive the EV revolution, but the corporate sector in Japan does seem to be more dynamic than it has been before. However, while Japan's experience isn't inevitable, nor is Taiwan's. Another factor behind Taiwan's ability to survive the bursting of the bubble was Taipei's decision to quickly loosen cyclical policy as stock prices began to fall. That's important context for what's happening in China today. On the one hand, the bubble in property construction is now bursting. As more time passes without a strong attempt to stabilise the situation, so the risk rises that Beijing is repeating the same cyclical policy mistakes made by Tokyo in the early 1990s. On the other hand, the corporate sector in China isn't stagnating, with the evident growth of the new energy and electric vehicle industries just being the most prominent examples. These competing pressures clearly don't make the future very predictable. It is worth noting, though, that Taiwan's successes haven't all been plain sailing. It took until 2019 for the TAIEX to regain the level of 1990. Overall interest rates have more or less continually declined ever since. That being the case, the upheavals in China right now are likely to have similarly long-lasting impacts. Before, for more information on all of the economies of East Asia, from China, Japan, Korea and Taiwan, please look at our website, eastasiaecon.com, where you'll see a whole selection of curated charts as well as all the data on these economies. Thanks very much.